Well, let's turn our attention to Vedanta. The company, as I said, reported a steady quarter in December. The revenues were up, the profitability as well was up, and the debt went down. To detail the past quarter's numbers and give us a sense about how the commodity market is shaping up, the Group CFO at Vedanta, Mr. Goel, joins in on the show. Hi, Mr. Goel. Good morning, and always good to have you on the show, sir. Let's start off with the basics first. What's the outlook on the aluminium business? With regard to the cost of production, which has come down substantially, is there more room to go? And the outlook on LME prices as well. Please go ahead.
No, indeed, good day, Nigel, and good day all. And in fact, in multiple respect, the third quarter just gone by, has been a defining quarter for Vedanta. Aluminium in our portfolio right now is our single largest business. And you're right, our cost of production is almost $1,684 per ton, which has came down by almost 10% YOY basis. From here, we do see in the near future, as in the fourth quarter, it will come down by another $150 odd or so. So our COP will keep going down. In terms of pricing outlook, right now, there's a global deficit in terms of demand and supply. The demand, in fact, is quite accelerated, and the supply will take time to catch up. So it is a demand-led pricing. We do foresee that the pricing will remain elevated in near future. So both the levers, the pricing and the cost, are favorable. In that case, aluminium margin can touch about $1,500 per ton in the fourth quarter.
Oh, that'll be brilliant. If you can get to around $1,500 per ton on the aluminium business. But let's talk about the other vertical besides aluminium as well as zinc. Oil and gas. That business, well, it's been moving, in a bit of a range in terms of EBITDA. It's been ballpark around 1,000 crores. When do you finally see some kind of ramp up on the oil and gas business?
Cane, in fact, is our third largest business. You're right, almost 1,000 crores remains the EBITDA in case of oil and gas. One very important point to underscore that oil and gas also brings a bit of factor of diversification in the portfolio, where the Brent pricing is not linked to LME, and hence it provides a bit of a linearity and tangibility in terms of earnings. The cane volume is one area where the entire management is focused singularly. Almost 90,000 barrels per day is right now the production. We foresee this number going to almost 120 or so in 6 months' time. Critical point to note in this business remains if we get more discovery and if we can explore more, this business has significant potentials.
Mr. Goel, you seem very well placed in this entire melt-up scenario that we're seeing globally. Higher prices, cost as well going down. So that's good on you. The big question is, though, you're throwing off so much of cash. What do you do with it?
Our focus, in fact, remains singularly in terms of basics, which is the volume augmentation, cost compression, and focus on cash generation. So Vedanta's cash conversion from EBITDA is almost 50%, if not more. So in the current year, we'll generate more than 3.5 billion free cash flow pre-growth capex. Now, with the cash flows, the single biggest tool with the company remains allocation of capital. So we intend to invest the money for growth in terms of growth capex, almost 1.5 billion in next 3 years' time, every single year. We also intend to reward shareholders through dividend. And Vedanta has been India's largest dividend-paying stock. And finally, deleveraging. Net in the current fiscal with the free cash flows and the zinc offer for sale, we are looking at almost $1 billion deleveraging in Vedanta as a group. In that case, Vedanta India's net debt to EBITDA that we closed at about 1.23x in December will come down to 1x. And 1x leverage remains a benchmark in India and the world over in metals and mining.
Well, that's been a good positive, actually, with regard to deleveraging both at the parent as well as at the listed company level. But the street sometimes a little bit cautious about Vedanta Resources. The debt, yes, as you said, has reduced by around $4.5 billion in the past few years. Earlier, you had guided that number comes down to around $3 billion. On course?
No, that's correct. And you're right. The VRL debt from almost 10 billion has gone down to 4.5. It is a decade-low debt. And our commitment and the VRL has been 3 billion reduction over 3 years. So VRL debt will go down to 3 billion or less than 3 billion over next 3 years' time organically.
All right, Mr. Goel, we take that on board. But the street is a little bit cautious on Vedanta. Sometimes you'll get very, very adventurous. Like you all thought the Jaiprakash asset was very, very strategic fit. But the street actually thought otherwise. Basically, is Vedanta looking at any ambitious inorganic growth?
action speaks louder than the words. If you look back last 3 years, debt at Vedanta Resources cut down from 9.1 billion down to 4.5 billion. At Vedanta India, leverage from 2.1x down to 1.2. It will further go down to 1x as we close the fiscal. So deleveraging remains our single biggest priority. Rest all priorities will be subservient to that priority. So there's no reason to be nervous. Vedanta will continue on the path of deleveraging in near future.
Sir, in passing, you mentioned about that Hindustan Zinc OFS. Could you tell us what is the targeted holding that Vedanta Limited has in Hindustan Zinc? Do you all want to pare it down further?
Hindustan Zinc Limited right now by far India's most valuable metal company with a market cap of more than 3 lakh crores. Our position in the past has been quite clear that in Vedanta, we intend to retain more than 51% majority, so mathematical majority, so we don't need to sell more. In zinc, we don't have a target, but over the last couple of years, we have been liquidating. I think our holding will remain in the same vicinity. With the demand and the pricing, some more liquidation is strategically possible, but right now, nothing on the table.
The final question then, sir, on demerger. When do we see the 5 listed entities of Vedanta Limited?
We intend to make 1st April at the date on which demerger becomes effective. Thereafter, it takes almost 6 weeks' time to get things listed. So between 1st April and 15th of May, all Vedanta companies will get listed. One Vedanta becomes 5 Vedantas in first quarter.
Always a pleasure talking to you, Mr. Goel. Wishing you and the team all the very best. The last quarter was good, and going by what you're saying, the next quarter will be spectacular. Thanks a lot for joining in. Well, time to